midnight, February 1st. That's when it happens. That's when your bank account stops being yours and starts being theirs. The rule went live at 11:47 p.m. last night while you were sleeping. By the time you read this, the infrastructure is already operational. The $10,000 threshold is already programmed into the system. And the people who made this decision are counting on you not knowing until it's too late. Welcome to American Power Brief. This isn't about a policy change. This isn't about new bank agar. This is about the moment when access to your own money becomes a privilege instead of a right. And the clock showing midnight on February 1st isn't a countdown to something coming. It's a countdown to something that's already here. Let me tell you what happened in that committee room. It was 11:13 p.m. on January 23rd. The building was nearly empty. Most of Congress had gone home. The cleaning staff was finishing up the West Wing. And in a small hearing room on the third floor, 7 people sat around a table and voted to give the Federal Reserve emergency powers that would fundamentally change how Americans access their money. The vote was 5-2. No debate, no discussion. Just a voice vote and a signature. Emergency Banking Protocol 2026-4B became law. And nobody told you. Now, before we go any further into what this protocol actually does, I need you to do something. You see that subscribe button? I know everyone asks you to CL-ick it. But here's why this one matters. You've been around long enough to know that real information doesn't come from the evening news. It comes from people who read the documents they bury on page 247. It comes from people who stay up past midnight watching committee votes that nobody else is watching. So hit that subscribe button. Not for me, but because what we're about to walk through in the next 25 minutes is the difference between protecting yourself and waking up on February 2nd to find out your money is trapped. And drop a comment below. Tell me where in the world you're watching this from. Because what I'm about to show you, it's not just happening in America. It's coordinated, it's global, and your country might be next. Here's what Emergency Banking Protocol 2026-4B actually is. Section 3, paragraph 7, page 18. In the event of systemic liquidity stress, designated financial institutions are authorized to implement temporary access restrictions on deposit accounts, exceeding $10,000 in aggregate daily withdrawals without prior customer notification. Let me translate that for you. If banks start running low on cash, they can freeze any account where someone tries to withdraw more than $10,000 in a single day. No warning, no phone call, no email. Your card just stops working. But here's where it gets worse. The definition of systemic liquidity stress, it's not defined in the document. It doesn't say what specific conditions trigger this power. It doesn't give metrics. It doesn't give thresholds. JUT is when the Federal Reserve determines that systemic liquidity stress exists, which means they can activate this whenever they want for whatever reason they want and call it an emergency. A software engineer in Seattle sits in his home office staring at his screen. He's been building trading algorithms for 15 years. He knows how banks work. He knows how liquidity works. And he knows something that most people don't. The banks are lying about their reserves. He pulls up the Federal Reserve's H8 data, the weekly report on bank assets and liabilities. The numbers show $620 billion in unrealized losses sitting on bank balance sheets. That's money that's already gone but hasn't been marked down yet. It's phantom capital. And when those losses get recognized, when they show up in the quarterly reports, dozens of regional banks will technically be insolvent. The engineer leans back in his chair and realizes something terrifying. They're not preparing for a liquidity crisis. They're preparing for a bank run. And when that bank run starts, when people panic and try to withdraw their money all at once, this new protocol gives banks the legal authority to slam the door shut, not to protect depositors, to protect themselves. Now you might be thinking, okay, $10,000, that's a lot of money. Most people don't withdraw that much at once anyway. But think about this. A small business owner pays his suppliers $12,000 for inventory, frozen. A family sells their house, but it gets worse. Because buried on page 31, there's another section that nobody's talking about. Section 7, Enhanced Monitoring Requirements. It requires banks to flag any transaction that suggests a depositor is attempting to circumvent access restrictions. What does that mean in practice? If you start making multiple withdrawals just under $10,000, they flag you. If you try to wire money to a different bank, they flag you. If you buy gold, if you buy silver, if you buy cryptocurrency, they flag you. And once you're flagged, Section 8 kicks in. Temporary account suspension pending investigation, 30 days minimum, no access, no appeal, no recourse. 3 countries, same week, identical language. While the U.S. was passing Emergency Banking Protocol 2026-4B, the United Kingdom implemented something called the Financial Stability and Access Framework. Australia passed the Emergency Deposit Protection Measures Act. Canada updated their proceeds of crime regulations, all within 72 hours. All with the same core provision, government authority to restrict deposit access during undefined emergencies. This wasn't coincidence. This was coordination. The Bank for International Settlements, the Central Bank for Central Banks, published a paper 18 months ago titled Day for Making Cash Costly, a Policy Framework for Digital Currency Transition. The strategy was explicit. Create friction in the physical banking system so people voluntarily adopt digital alternatives. How do you create friction? Withdrawal limits, processing delays, suspicious activity flags, account freezes, death by 1,000 inconveniences. A retired teacher in Ohio walks into her local bank branch. She's been banking here for 30 years. Same building, same tellers, mostly the same manager. She wants to withdraw $12,000 to help her daughter with a down payment on a house. The teller types into her computer, pauses, types again, then looks up with an apologetic smile. I'm sorry, Mrs. Henderson, but this withdrawal requires manager approval and a 7-day waiting period. The teacher doesn't understand. It's my money, she says. Yes, Ma, but there's a new policy. For withdrawals over $10,000, we need to verify the funds and ensure compliance with federal regulations. 7 days, the teacher repeats. 7 days. That's not a banking system. That's a prison system. Let me show you the historical pattern because this has happened before. March 16th, 2013. Cyprus. The government announced a bank holiday, just for the weekend, they said, to sort things out. When the banks reopened on March 28th, 12 days later, deposit accounts over 100,000 euros had been seized. Not frozen, seized. The government took 47.5% of every large deposit to recapitalize the banks. They called it a bail-in. The people who had spent their entire lives saving, who had done everything right, who had trusted the system, lost half their wealth overnight, not through taxation, not through inflation, but through direct confiscation. And it was legal. Because during that 12-day holiday, they changed the rules. June 28th, 2015, Greece. The ATM started displaying a new message. Daily withdrawal limit, 60 euros. Not 6,000, not 660. That's what the average Greek citizen was allowed to access per day. The government said it was temporary, just until the crisis passed. Those restrictions stayed in place for years. A Greek businessman described it like this. I had 200,000 euros in my account. On paper, I was wealthy. In reality, I couldn't buy groceries, I couldn't pay my employees, I couldn't keep my business running. The money existed, but I couldn't touch it. So what good was it? October 17th, 2019, Lebanon. The banks announced temporary enhanced security measures. Customers started finding their accounts locked. No official announcement, no government decree, just a sudden inability to access funds. A doctor in Beirut had saved $80,000 over 15 years. When he tried to withdraw $5,000 to pay for his mother's surgery, the bank said no. We don't have dollars available, they told him. Try again next month. He tried every month for a year. The answer was always the same. 4 years later, he still can't access his savings. The money shows in his account balance, but it's a mirage. Digital numbers on a screen that mean nothing. The pattern is always the same. First, the assurance. Everything is safe, the deposits are protected, and there's no need to worry. Then comes the small restriction presented as temporary and reasonable. Then comes the larger restriction justified by external circumstances. Then comes the freeze blamed on emergency conditions. Then comes the confiscation, renamed as a contribution to stability. By the time people realize what's happening, the exits are already sealed. Now here's what nobody's asking. Why no? Why February 1st? What do they know that they're not telling us? The answer is in the numbers. Commercial real estate defaults up 340% year over year. Regional bank stock prices dare own 60% from their 2022 highs. Corporate bankruptcy filings up 38%. Consumer credit card delinquencies are at 15-year highs. Student loan defaults are about to restart after a 3-year pause. The economic pressure is building, and the banks know when that pressure releases, when the defaults start cascading, when the credit crunch becomes a credit crisis, people are going to panic. They're going to rush to withdraw their money. And the banks don't have it. Remember, banks operate on a fractional reserve. They keep maybe 10% of deposits as actual cash. The rest is loaned out, invested, or tied up in assets they can't liquidate quickly. If EVE and 20% of depositors tried to withdraw their money simultaneously, most banks would fail within 48 hours. So they did what governments always do when the math stops working. They changed the rules before the crisis hit. That's what Emergency Banking Protocol 2026 4B really is. It's prepositioning. It's building the cage before the animal realizes it's trapped. A financial analyst in New York runs the numbers. She models what happens when the first major regional bank fails. Let's say it's a bank with $50 billion in deposits. The FDIC insurance fund has $128 billion in total. One bank failure of that size wipes out 40% of the insurance fund. What happens to the second bank that fails? The third? The 10th? The insurance runs out. And when depositors realize the FDIC can't cover everyone, that's when the real panic starts. She publishes her analysis in a financial journal that 3 people read. Nobody pays attention. But 6 months later, when it's happening exactly as she predicted, everyone will act surprised. But wait, there's something else, something darker. Section 12 of the protocol, it gives the Federal Reserve Authority to coordinate with the Department of Homeland Security on account access decisions. Why is DHS involved in banking? The official reason is national security, preventing terrorism, sand-topping money laundering. But read the language carefully. It allows account freezes based on association with assignated persons or organizations. And who gets designated? That's not defined. Is it criminals? Sure. Is it terrorists? Of course. Is it also people who donated to the wrong political cause? People who attended the wrong protest? People who posted the wrong opinion online? The infrastructure is there. The authority is there. All that's missing is the trigger. Remember Canada, February 2022. Truckers organized a protest. Citizens donated money to support them. Small amounts, $50, $100. Peaceful donations to a legal protest. The Canadian government's response was unprecedented. They invoked emergency powers and froze the bank accounts of donors. No trial, no charges, no judicial process, just a list and a keystroke. One woman donated $50. Her account was frozen. She couldn't buy groceries. She couldn't pay her rent. She couldn't put gas in her car. For a $50 donation to a cause she believed in, she was financially executed. That same infrastructure now exists in the United States. Emergency Banking Protocol 2026-4B gives them the authority. The coordination with DHS gives them the mechanism. The undefined triggers give them the flexibility. They can freeze anyone for any reason and call it an emergency action. And you have no recourse because during an emergency, constitutional protections get suspended. A college professor in Boston teaches constitutional law. She reads the protocol and recognizes something her students don't. This violates the Fourth Amendment protection against unreasonable search and seizure. It violates the Fifth Amendment guarantee of due process. It violates the 14th Amendment Equal Protection Clause. She writes an analysis and submits it to 3 law journals. All 3 reject it, not because her analysis is wrong, but because, as one editor tells her, this is too politically sensitive right now. The truth is being censored because the truth is dangerous. So what happens on February 1st at midnight? The protocol activates, but nothing visible happens. The ATMs don't shut down. The bank branches don't close. Everything appears normal. That's by design. They want you to be comfortable. They want you complacent. They want you not to pay attention, because the trap doesn't spring until you try to leave. You walk up to the ATM and try to withdraw $200. It works fine. You swipe your Cato Pay the grocery store, no problem. Everything seems normal. But then you try to wire $15,000 to buy a car. Declined. You try to withdraw $12,000 in cash for a home repair. Requires manager approval, 7-day waiting period. You try to transfer $20,000 to a different bank because you heard they're more stable. Flagged for suspicious activity, account under review. That's when you realize the cage door was already closed. You just hadn't tried to walk out yet. Now let me show you what's really happening behind this. Because this isn't just about controlling your money. It's about forcing you into the system they're building to replace it. The central bank digital currency, the CBDC. FedNow launched in July 2023. That's the infrastructure. Emergency Banking Protocol 2026-4B creates the pain, and pain drives adoption. When accessing your old bank account becomes impossible, when cash becomes unusable, when every traditional banking transaction is delayed, flagged, and frozen, they'll offer you the solution. The Fed Wallet, instant transfers, no withdrawal limits, no waiting periods. Just download the app, verify you, your identity, and all your problems disappear. That's the pitch. And millions of desperate people will accept it because anything is better than being locked out of their own money. But here's what they don't tell you about the Fed Wallet. Every transaction is tracked, not by your bank, but by the Federal Reserve directly. Every purchase, every transfer, every penny you spend is logged on a government server. No privacy, no anonymity, complete but surveillance. And that's just the beginning. Because digital currency is programmable. They can set expiration dates on your money, spend it by this date, or it disappears. They can restrict what you're allowed to buy. This money cannot be used for firearms, for cryptocurrency, for precious metals, for any set they decide is problematic. They can implement negative interest rates. Pay us 5% annually for the privilege of holding our currency. And they can turn off your access instantly. Wrong political donation, frozen. Wrong social media post, frozen. Wrong association, frozen. No trial, no judge, no jury. Just an algorithm and a keystroke. A programmer at a fintech company gets assigned to a project. Build the transaction approval logic for the Fed Wallet system. The requirements document is specific. Flag purchases of gold, silver, bandit coin. Flag transfers to international accounts. Flag transactions at gun stores. at political organizations, A and T religious institutions on a watch list. He raises his hand in the meeting. "This seems like financial surveillance," he says. His manager responds, "This is fraud prevention and national security. Build it or find another job." He builds it. 3 months later, he quits and tries to warn people. Nobody listens. The debt burden makes the trap even worse. Americans carry $17 trillion in consumer debt. Credit cards, auto loans, student loans, mortgages. The entire economy runs on debt, but debt requires payments, and payments require access to money. When Emergency Banking Protocol 2026-4B starts freezing accounts, people can't make their debt payments. Not because they're broke, but because they're locked out. Miss one payment, and your credit score drops. Miss 2 payments, you're in default. Miss 3 payments, and the collection calls start. The system has built a maze where every path leads to the same place. The Fed wallet, the digital cage, the programmable prison. And most people will walk in voluntarily because they all see it as freedom compared to being locked out of their traditional bank account. Let me show you the timeline. February 1st, midnight. Protocol activates. Nothing visible happens. February 1st through February 14th. The quiet period. A few people try to make large withdrawals and get denied, but it's not widespread yet. Most people don't notice. February 15th through March 1st. The awareness phase. Social media posts start appearing. "My bank won't let me access my money." The posts get deleted for spreading misinformation, but word spreads anyway. March 1st through March 15th. The panic phase. Millions of people try to withdraw cash simultaneously. Banks start limiting even small withdrawals. ATMs run dry. Branches close for security reasons. March 15th, the solution phase. Federal Reserve announces the Fed wallet emergency rollout. For your safety, for your security, for your access to your own funds. It's optional, they say. But traditional banking remains restricted indefinitely for safety. By April 1st, 100 million Americans will have downloaded the Fed wallet, not because they wanted it, but because they had no choice. But here's the part they really don't want you to understand. Your leverage is right now, today, before February 1st, before the protocol activates, before the panic starts. Right now, you can still move money. You can still withdraw cash. You can still convert to assets they don't control. But that window is measured in days, not months. A small business owner in Texas makes a decision. He looks at his business account. The solution isn't to panic. Panic is what they want. Panic drives you into the Fed wallet trap. The solution is strategic positioning. Here's what you do in the next 5 days. Number 1, gradually withdraw cash, not $10,000 at once. That gets flagged. Take out $500 every other day. Small bills, 1s, 5s, 20s. Over 2 weeks, you can extract $5,000 without triggering any alarms. That's your operational liquidity. Store it securely at home. Not for investment, for function. Number 2, diversify into physical precious metals. 10 to 20% of your liquid savings. Silver coins for small transactions. Gold for larger value storage. These exist outside the banking system. They can't be frozen. They can't be tracked. They can't be programmed. They're yours. Number 3, move funds to smaller regional banks or credit unions. Not the big banks that are lobbying for CBDC. The small institutions that still operate on relationship banking. They're not immune, but they're less connected to federal control infrastructure. Number 4, pay down variable rate debt. If you have credit cards at 22% interest, a HELOC at 9%, pay those off before the freeze hits. Because when they freeze your account and you can't make payments, they can seize your assets. Number 5, build local networks. Find people in your community who understand what's coming. Farmers who sell produce for cash. Contractors who trade labor for payment outside the digital system. Skills you can barter. These relationships become invaluable when the official system locks you out. The most important thing to understand is this. The battle isn't between you and the banks. The banks are just the tool. The battle is between centralized control and individual freedom. They're building a system where every financial decision you make is monitored, approved, or denied by an algorithm. Where your ability to buy, to sell, to save, to spend depends on your compliance with whatever rules they decide to enforce. Where dissent becomes economically punishable. That's not banking, that's slavery, digital slavery. And the chains are being built right now while everyone's distracted. A grandmother in Florida sits at her kitchen table with her teenage grandson. She shows him a jar filled with old silver coins, pre-1965 quarters, dimes, half dollars. These are worth more than money, she tells him. Why, he asks. Because they're old? No, she says, because they're real. She hands him a quarter. It's heavy, it's solid, it's tangible. This works whether the banks are open or closed, whether the power is on or off, whether the government approves or not. She picks up her smartphone and shows him her banking app. This, she says, pointing at the balance on the screen, this is not real. This is permission to access something they control. He doesn't fully understand, but he takes the jar anyway and puts it in his backpack. 2 months later, when the freeze hits and his mother can't buy groceries with her debit card, he'll trade those silver quarters for food. and he'll understand what his grandmother meant. The midnight deadline isn't just about February 1st. It's about the moment we're living in right now, the moment when you can still choose, where you can still act, where the door is still open. Emergency Banking Protocol 2026 4B is real. It's the AW, it's activated. When infrastructure is operational, the only question is whether you position yourself before the crisis or during the crisis, before the strategic. During is desperate, and desperate people accept terms they would never accept otherwise. So let me ask you directly. When midnight hits on February 1st, when this protocol is fully operational, when the next economic shock triggers the freezes, will you be ready? Will you have cash? Will you have real assets? Will you have options? Or will you be standing at an ATM watching your card decline while the balance on the screen says you're wealthy? The choice is yours, but that choice expires soon. The clock is ticking. Midnight is coming, and once it hits, the rules change forever. This is American Power Brief. Subscribe right now if you want to see tomorrow's video, where I reveal which specific banks are most at risk and how to identify if your bank is on the collapse list. Comment below where you're watching from and whether your bank has already started implementing restrictions. The next 24 hours are critical. Don't waste them.